Hi, I'm Joe Correa, and I'm the president of Finity Mortgage. I'm going to explain to you what the digital HELOC is all about. I personally got a digital HELOC and I closed in 4 days, and I have an 11% interest rate, and I was approved for $170,000. And I'm only required to make interest payments. So I thought that was a very good opportunity. Plus, I have funds available in case of an emergency or in case I want to invest those funds. Now, I did use part of those funds to pay off debt. So you are allowed to use the money to pay off debts. You're allowed to use that money to improve your home, or you can use that money for whatever you want, really. If you want to take a vacation and then have the rest of the money available for investment purposes, that's perfectly fine as well, because it is your home's equity. Okay, so when it comes down to the HELOC works just like a credit card, okay? But you're drawing from the equity of your home. In this case, let's say you have a $500,000 home and you get a $100,000 line of credit. Let's say you owe another $200,000 on your mortgage. So it'd be total $300,000 that you would owe on the home. Now, of those $100,000, how would you even get approved? The minimum credit score that you need is to have at least a 640 credit score. Second, you don't need an appraisal up to $750,000. So if you get a home equity line of credit, what's going to happen is the computer is going to do an automated valuation, and it's going to figure out exactly how much your property is worth in general. And if it comes back a little bit lower, then you can still ask them to review it again, and they will do that for you. Now, in my case, I closed in 4 days, and all I needed to provide was my driver's license and a copy of my mortgage statement. So they knew exactly how much I owed and what my payments were for that. Next, when it comes to the credit, when they review your credit, it's initially only a soft pull. So a soft pull doesn't affect your credit score. So you'll be fine when it comes to that, but at least they have an idea as to if you qualify or not. Once you do receive an offer, which will happen in a few hours or sometimes less than that, then you are able to accept the offer. Let's say they tell you that you applied for $100,000 and they tell you that you're approved up to $150,000. That's exactly what happened to me. I applied for $150,000 and they offered me $170,000. So I accepted $170,000. And when that happens, then all you need to do is you will get two different options. You will either upload your tax returns or W-2 or pay stubs, or there's the default option where you connect your bank account and the automated system will add up any and all deposits in your personal bank account. You're not allowed to use a business bank account, by the way. Simply just part of how it works. So on your personal bank account, it'll add up all your deposits. So let's say you have $10,000 in deposits. That's what the automated system will use to qualify you in terms of your income. So you don't even have to provide tax returns, pay stubs, or W-2s if you have those deposits in your bank account. And then that way you can qualify that way. Also, I do want to mention, if there's somebody else on your bank account, they will divide that income by 2. So if you have somebody in your bank account and they don't want to be in that bank account, you can remove them from that bank account and then apply for the loan, and then you'll use the full 100%. If not, you can also have them included in the loan, and then that way you can use 100% of the deposits. So this type of loan is incredible. I know no other bank offers this. So this is something truly special. Now let's go over how the draw period works. So for the first 5 years, you're allowed to take money out and pay it back. Take it out, pay it back, just like a credit card, as many times as you want. And initially, you're going to get checks in the mail to be able to use those funds. And at closing, you'll actually get the money wired to your bank account, whichever bank account you provided at the beginning to verify your deposits, if that's what you wanted. If not, you can still provide your bank account information. And then after that, you can make interest-only payments for the first 5 to 10 years. And those interest-only payments are, again, based off the interest rate, which will be the margin plus the index. And in most cases, it's probably most cases because it's a second mortgage, it's not going to be a lower interest rate. It's going to be a little bit higher since there's higher risk for the lender. So that's anywhere from 9 to 11%, sometimes 8%, sometimes 12%, but in general, 9 to 11%. And you're going to make interest only payments for the first 5 to 10 years. If you want to make principal and interest, you're allowed to, and you can go ahead and do that at any moment, either parts of small amounts, or you can pay the entire amount off. Now, when it comes to the interest, you're going to pay for the first 5 to 10 years. And then after the 10th year, you're going to have a fully amortizing payment, which will mean you'll be required to pay principal as well. And this is for a 25-year period. So it becomes a 25-year mortgage. So initially, for the first 5 or 10 years, you're going to have interest only. It's pretty easy, pretty simple to calculate. You're simply going to calculate whatever the amount is, let's say $100,000 times 0.10, which would be 10%. That would be $1,000 divided by 12, which would be on a monthly basis, which is what you're required to pay. So in that case, for 12% of $1,000, this would be just under $100 would be what you would be required to pay on a monthly basis, which is not very much for $100,000. So that's why it's such a big benefit. And you can use these funds for whatever you want. Okay, you'll have 3 options. You'll have the option to either pay with, you can use those funds to pay off debts. You can use them to improve your home improvement. And the last option is to actually use it for whatever you want. Okay, so you don't have to pay debts. You can just have the money available and invest it. And for the next part, I also want to mention that there is an annual fee of $150, which is very common. Even credit cards have that, okay? But you're getting $100,000 or up to $750,000. So that's how it works. Now, a lot of you might be asking yourselves, well, it sounds like this seems all very simple, but when it comes down to it, how much will I get approved for? Well, let me show you now on my computer. I'm going to show you how you apply, how the process works. The application takes, I think I completed it in less than a minute, because you just have to put your name, your address, your email address, your phone number, some basic information. And then with that, it automatically triggers exactly how much the value of your home is and how much would be the initial offer without verifying your income. And then once they send you the offer and you accept the offer, then you would upload your income or use the account where you're able to connect your bank account, and the automated system will add all your deposits to save you time. And you upload your driver's license and your mortgage statement, and you're done. That's what I did, and I got approved for $170,000. Sometimes you'll get asked for your insurance statement or your HOA if there's an HOA, but many times you're not asked to do that. Now, this type of program does allow you to do this on homes that you have that are your primary residence, which means that you live there. You can do this for second homes, and you can do this for investment properties. Okay. And it basically goes to being able to calculate how much you're allowed to owe on each type of property. So in general, I know I'm going over these things verbally, but sometimes it's easier to hear somebody tell you about it instead of having to read it and then interpret the information. So for your primary residence, you can finance up to 80%. So let's say your home's worth $1 million, you can finance up to $800,000, including your primary or first mortgage. So you can get a home equity line of credit that covers that gap up to $800,000. Okay. For a second home, you drop 5% off that, which would be up to 75%. And on an investment property, up to 70%. Now, I want to go ahead and get started showing you exactly how it works. You can continue now and follow along using the link that's just below this video. And then that way you can copy exactly everything that I'm doing at the same time to apply for the home equity line of credit. Now, remember, it's always better to ask for a little bit more than to ask for less, because if they give you a home equity line of credit, they tell you you're approved for $200,000 and you only need $100,000. Well, at least it gives you the flexibility of taking $120,000 or $125,000 instead of having to get exactly the amount that you initially were thinking of. Okay, so it's better always to ask for more than to ask for less. And again, you have nothing to lose because initially you're just doing a soft pull. So let's go ahead and get started. Let me hop on now on my computer and show you. Okay, now that we're on the application, you clicked on the link and you'll find yourself here where it says, hello, get pre-approved for your home loan here. Now, my phone number and my information are right down here on the page. You'll see where it says Joseph Korea and then it has my phone number. Now, as it says over here, there is no obligation at this stage of the process. So you can choose to accept and move forward or not. And even then, you can always cancel at any time, okay? That's not the purpose, but you can cancel at any time. So let's move on. So down here, you're gonna go ahead and complete. You're gonna enter the property address of the home that you wanna get the line of credit for. Now this can be, as I mentioned before, your primary residence, secondary residence, or investment property. And then when it says occupancy type, you're gonna click right there and it's gonna let you choose which option you want. Next, you're gonna go ahead and enter a home value. The system's gonna calculate it for you anyway, but you might as well get started and put a value there. So you could put whatever value you want there, for example, 200,000 or $1 million. And then your current loan balance will be your first mortgage. So if on your first mortgage, you owe $190,000, that's what you enter. Next, you're gonna enter right where it says requested loan amount. You're gonna go ahead and put the exact amount that you're applying for. And yes, you'll probably get a different amount that's higher because that happens often. But if for any reason, if it comes back lower, that's perfectly fine as well. At least you're getting approved for something and it gives you the option to choose if you want it or not. Next, where it says use of proceeds, you're gonna choose if you're gonna click on home improvement, debt consolidation, or other. When it comes to other, it means you can do whatever you want with the money. Now, the interest rates also go based off each one of those tiers. So if you want home improvement, you'll get the lowest interest rate. And if you choose debt consolidation, it'll have the next higher interest rate. And then other will have the highest interest rate because you're not even mentioning what it's for. So you're gonna have a little bit higher interest rate. But those are the options. And for debt consolidation, if you want to pay off credit cards, you can go ahead and choose that option right there. Now, for credit scores, you're going to click on there and it's going to give you a range. As you can see, 640 is the minimum credit score. But then if you go further down, you can choose whatever number your range you're in. And if you're not sure, you can always click I don't know. It's no big deal. It doesn't matter. The system's still going to go ahead and do a soft pull and it's going to determine what your credit score is in a general sense. Next, we're going to start entering your information. So where it comes down to primary borrower, you're going to enter your first name, your last name, and then the other two are optional when it comes to middle name or suffix. Your marital status, you want to click right there and choose either married, separated, or unmarried. Then you're going to put your phone number and your email. Pretty simple, right? So next, and by the way, this is exactly what I did to get $170,000 in terms of a line of credit. So there is no secret recipe. It's very basic, very simple. Now, this is where we come down to annual income. So for annual income, if you want to go ahead and enter any of these, you can. And if you choose one and another income, so let's say, for example, you have a salary plus you have rental income on a rental property, you would click both boxes, okay? And when it comes down to Social Security income or self-employment income, you click whatever is the situation. And then you're gonna go ahead and see your total annual income. But don't worry, if you wanna use the option where it's gonna only verify your deposits that are in your bank account, doesn't matter what option you choose here, you'll still have that option. Then you'll go ahead and connect your personal bank account and it'll automatically add up all the deposits and it will tell you exactly how much you qualify for. So that's amazing. There are no other banks or lenders that offer that. So that's extremely valuable. Next, you're gonna go ahead and create a password. Now, I want you to create a password that you will remember. If you want to write it down, write it down. And if for any reason you forget, you can always reset the password. So it's not a big deal, but try to remember your password. And to finish the application, you're going to go where it says, by checking this box, I hereby agree to the privacy policy. So you are going to get an email saying you applied for the loan and that the next process is blank. So either you get approved or you get approved for a higher amount or whatever it is. And then you check that box. And then next you have to also check the other box to receive any notices and disclosures, which you will receive when you start the application process, and to be able to sign the documents on your phone or on your computer or tablet. So that's the general process. And then once you're done, you click on agree, I agree. And then I will get a response back with your information. And then I might ask you to verify some information that you've already entered here so that I can go ahead and submit your loan. And this entire process is very, very fast. So don't be surprised, because it's all digital. There is no paperwork you need to sign. And that's why it's much faster. But that's how banks are doing it nowadays. So we have to adapt. If you have any questions with the application process, now you know exactly how it's completed, you know exactly how it's done, and you can go ahead and copy my same process, the same thing I taught you right now, I showed you right now, when you apply for the home equity line of credit. And if for any reason you decide you want to refinance or you want to get a lower interest rate, then I do have other options. But to be able to get those lower interest rates, they do verify everything, income, assets. It's a little bit longer process, but if you're able to provide those things, then that's perfectly fine. But if you're in a little bit of a rush and you want to get those funds right away, like within 7 days or less, or maybe just a few days, and you don't want to have all those income documents provided, you just want to have your bank account connected, and you want to have an automated appraisal valuation, so there's no lengthy appraisal process, which most banks charge anywhere from $500 to $750 just to order those appraisals. So it saves you money, it saves you time, there's no application fee. So if you're ready, go ahead and click on the link below, and I'll be ready to review your application right away. Now that you've seen exactly how to complete the application, if you have any questions and you start the application process and for any reason you are stuck in someplace on the application, or you have questions on a certain part of the application, my phone number is right there. You can call me, text me. If you want to email me, you can do that as well. And if for any reason you are in the application, don't worry about it. There's actual people that you can text inside the application and ask them, oh, my mortgage statement is from 2 months ago. Is that fine? Or do you need the back of my driver's license as well? Whatever may be that you have a question on. So there's many ways of getting help in case you're not sure of a certain step or of the process. Okay, let's get started. Go ahead and click on the link below and start the application process for the digital HELOC. And remember, the sooner you send all the documents, the sooner you can close. So you can actually close. I closed in 4 days, and you can even close up to 1 day, but I did it in 4 days, and I wasn't even rushing the process. I just completed the application. I got approved for the amount. I provided my driver's license, my mortgage statement, connected my bank account. And then once they approved that, they verified that I was the owner of the property. And then the very next day, I was able to schedule what's known as a digital closing, which is just on my phone. I showed the notary my driver's license, and then they asked me some questions as to exactly if I knew what the interest rate was, what the loan amount was, and if I agreed to those terms. And I closed on my phone. So that was pretty awesome. I like that part. So if you have any questions, I'm here to help again.